Welcome to Learning with MM. When it comes to investing, I ask you a question. What do you think is the most underrated financial statement in investing? Let me ask it another way. Let's say, what is the first financial statement you look for when trying to find out how good this company is? I can bet that majority of you think that is income statement, right? Because it tells you how much profit is your company earning. But I will argue that the best financial statement in investing is not income statement but cash flow statement. Why? Because valuation of a company is not dependent on profits but cash flows. When we try to value a company, how do we calculate value? We calculate the value by taking the present value of expected cash flows that this company will generate during its entire lifetime. See, in valuation, we nowhere talks about the profits. Obviously, profits do play a part. Profits are the basis from which we start cash flow statement. But there is so much more to evaluation of the company than just profits. What are those? Cash flow statement tells you where your money is going out or coming in into the company. It starts with profit, right? Cash flow statement always starts with net profit, but it tells you so much more than just a simple income statement. What it tells you? It tells you is your cash is being utilized for working capital or capital expenditure. So what does this tell when it say if the cash is stuck in working capital? That means that the company is not efficient in handling its debtors or stocks or creditors. Or if the company investing too much in capex or capital expenditure, and if the company is investing too much, how much growth is company generating by investing that money in capex, right? This is what an income statement never tells you. How efficient is your company when it comes to capital allocation? The second thing which cash flow statement can tell you is your cash going out on huge debt service payments like interest. Now you must be thinking, Mohit, the income statement has interest. So it shows how much interest we are paying. But you are missing the point. When you look at the income statement, you usually look at the bottom figure, the bottom line, and you think, okay, if I'm earning an X amount of dollars, then on a Y dollar of sales, then okay, we have got a good profit margin. But you never understand how much interest we are actually paying with regard to that profit. Cash flow statement specifically has a different section entitled Cash flow from financing activities, which clearly shows you how much debt service payments you have made during the year with regard to interest. And finally, a cash flow statement can also tell you how much cash you are paying back to your customers, or the cash flow statement can also tell you how much cash is being paid back to the shareholders in the form of dividends or buybacks. So, in later videos, we will discuss cash flow statement in details. But remember, cash flow statement is actually one of the most important financial statements when it comes to your investing, because valuation of the company depends on the present value of the expected cash flows.